Hey guys, this is Claudia here from the Bookkeeping Experts, back for more education and free tutorial on QuickBooks Online. I'm here to help you understand QuickBooks so that you can take your business to the next level. If you're a bookkeeper and if you're an accountant, I want to help you understand better what to do on specific occasion, on the day-to-day. Today we're going to talk about attorneys and about two specific needs that attorneys have that are different from other clients. One, which is required by the Bar Association, is the trust account. How do you treat trust account? Now, trust account is retained money that is paid to hire an attorney, but that money is still not earned until the services are provided. So that is unearned income, but it actually goes to a trust account, and we're going to show you how to create those accounts. We have another video on that. We're going to touch a little bit on that, but we're also going to talk mostly today about global settlement, which kind of works like a trust account, but the only difference is that it does not go to a specific trust bank account. That actually goes to your operating account, but nevertheless, that is not income. That money is for a case settlement that belongs to several people. That bucket of money will be divided among several people, including the attorney fees. But when you first receive that money, usually from an insurance settlement, it will go to a liability account, and it will have the name of the case. And then as money is paid off, it's going to come out of that account. So we're going to talk about how to create those accounts and how to reconcile, make sure that everything is good. So without much further ado, we're going to QuickBooks. Now, of course, this is a simple account, so it says landscaping, but let's pretend that it's Craig Law. Craig Law PA. There you go. Okay, so first of all, how do you treat trust account? Well, trust account, usually you're gonna see a bank account that it's a trust. It's not a checking, not a saving. It is a trust account, and money in will go to a specific client. So we're gonna pretend that this is a trust. Oh no, let's stay in checking. So let's suppose that this is a trust account. So money received is money that a client is paying to retain their services. Okay. But it doesn't belong the money was not earned yet. So let's suppose that the name of the client having this trust is Betsy. Okay. All right. And then usually you want to put the full name, but of course this is just make believe. And now you should have a trust bank account, but what we're going to create here, okay, this should have been like a trust bank account, but what we're going to create here is a short-term liability. Okay, so other current liability, and in QuickBooks, if you scroll down, you're going to have trust account liabilities. Okay, now you want to have a main trust account liability, which is the parent, and you want to have all the sub accounts from that trust account liability for each individual client. Okay, so short-term trust. So I'm just creating those accounts right from here, but of course you can create it from the chart of accounts. And when I create the specific trust for a client, you can call it client retainer, you can name it, or unearned income, but you know I like to just put as trust account, and then I put the name of the client, and it was Betsy, and I'm gonna make it a sub account of the main trust account. Now, not the trust bank, because you're gonna see the trust bank here, but is the trust liability account that I want to send it to. So, and I'm gonna save it. All right, and I'm depositing the money in behalf of Betsy, and that's gonna show up on the balance sheet, and I'm gonna show you how it looks. So we're gonna create another one here, pretend that this is another retainer paid. Let's add another client name, make believe. Oh, QuickBooks is a little slow here. Okay, count 1 and 2 and thinking. There it is. Okay. So the name of the customer, let's say Frosty the Snowman. Okay, that's Frosty the Snowman who had somebody suing him, so he's going to retain an attorney. Now we're going to create an account for Frosty, a trust account for Frosty. So in the account type, we're gonna select other current liability and click on the arrow on the second, and let's choose trust account liabilities, and I'm going to put the name of Frosty the Snowman. Okay, and it's a sub account from the trust liability. Once again, that should be a different trust account here. There should be like a trust bank, but I want the trust liability account as the parent account. Okay, and I want to make sure that I choose the right one as well. It is very important to go to the right account, and I'll show you why. Okay, now let's suppose that I provided some services, and now I'm gonna book this from the trust account, out of the trust account, and then I'm gonna book it in on the checking account. How do you do that? Okay, so let's suppose that the $75 was money out of the trust. So what I'm gonna do, I'm just gonna categorize here, and I am going to put the name of Frosty the Snowman, and I'm gonna select Frosty the Snowman trust liability. Okay, trust account Frosty the Snowman. So it's already created. I'm saying that I'm taking this money out of the trust. Now this is from the trust account. Like I said, this is pretend that this is the trust account. So this is the money that I'm taking out of the liability because it's gonna be converted as income. Okay, so I am not going to if you're transferring from the trust to the checking account, I am not going to record as a transfer from checking to trust, because I need to record the money in and the money out of that liability account. And then when the money hits the account, the regular account, we're gonna record this as income. Okay, so I don't necessarily have the right amount here. So what I'm gonna do, let's suppose that here I am depositing from Frosty the Snowman and from another client. So I can actually split. Okay, so the first one I'm gonna say Frosty the Snowman, and remember Frosty trust account, and that was $75. Oh, I'm sorry, not this one is hitting the bank account, the checking account. So what I'm gonna do is put it as attorney fees or service fees. Okay, so this is income. This is the income because this is the money. Like I said, we're pretending that this savings account is actually the checking account. So you took the money out of the trust because now you earn the money. And then you're going to deposit into the checking account, and you're going to record it as services because you earned the money. First, we recorded on that trust that we removed that liability for $75, right? And then we're going to record here the services. And let's suppose that there is services for somebody else. You're depositing another $100 from Betsy, let's say, and it's also services. And I still haven't taken the money out of Betsy liability on the other side, but we will. So we're just gonna have to find an account here, and let's see something that is out of there for 125. We don't have it, so we're just gonna take this $800 here, and let's suppose that it's 125. I'm gonna split so that it's not gonna create any confusion, and I'm gonna say Betsy out of the trust. Okay, and paid from Betsy, and that's $125. Oops. Okay, and because I don't have an exact amount here, you know, I'm just gonna there should be only money coming in and out of trust on the trust account. So money in, money out. But here I'm just gonna put something different because we don't have a specific trust account. This is just a simple account. It's kind of and I just wanted that specific amount, right, so that we can show. Now I'm gonna show you on the reports. We're gonna go to the balance sheet, and we're gonna show you how that trust will show in the balance sheet. So this year to date, when was that transaction? So I want to duplicate here to verify if I can find those transactions. Okay. And so August 24th. So we're gonna change this date here because it's not gonna. I'm gonna put August 30th. We're gonna talk on the future here. Okay, so we're gonna do the balance sheet from the 1st of January to August 31st because one of the transactions is on the 24th. So now we're gonna find the trust liability. So there should be like a trust account, bank account here, and there should be also the trust liability account. Okay, and look how it looks: trust liabilities, and we're gonna show money in and out of the trust account for Betsy and from Frosty the Snowman. Now from Betsy, we have the wrong amount here, so that's why we have a -70. So we're gonna take a look at the transactions here. Oh, there was only $55 that we deposit. So let me fix that transaction, and I'm gonna put here as $55. And it should be, let's see, 675 plus 70, 745. 745. Okay, yeah, there's my math, my head math here. Okay, it worked. Okay, like I said, I just wanted to have the exact amount so you can see exactly what happened. Okay, there you go. All right, so Betsy has a zero balance now, but if you click on here, you're gonna see all the money in and out of her trust account. So you'll see that oh, this didn't update, and it's showing as zero here. Okay, there you go, Betsy. Okay, there should be $55 in and $55 out, but QuickBooks didn't quite record it correctly. So let's take a look at Frosty the Snowman, and because this is just a simple account, it's not QuickBooks, it's just a simple account. So you see that there was a deposit for $200, and then $75 turn into income. So we remove it from the trust liability, and we recorded from the checking account, we recorded as income. So if we go to the profit and loss, you're gonna see it as income now. Okay. Okay, reports, and like I said, I love to use double screen so we can see different aspects, and I'm gonna change the date here to August 31st. And if you take a look at income, service, and this is kind of hard because this is not quite this is just a sample account. So see, okay, there you go, services. If I click on the 703, you'll see that now we have also recorded that $75 from Betsy, right, and that $125 from Frosty the Snowman. So and this money was taken out of the liability account here on the balance sheet and out of the trust account bank and recorded as income. Okay, so this is the trust. This is how we work with the trust. Now, when you reconcile the trust account, the trust bank account should have the same balance as the trust liability account, because it should be exactly the same. If you have interest earned in that trust account, that money will be transferred out of the trust into your checking account as income. Okay, so but it is recorded on the account in and out of liability, and then when it hits the checking account, that's how you record it as service. Oh no, as service income, or if it is interest, it will be entered as interest. Okay, all right. So now, what about global settlement? Like I said, the main difference is that the check that is being paid is not from the client, is not a retainer, because the client didn't pay you anything. That money comes from the insurance company or whoever is being sued. If they are, if you're not taking any retainer from the client, you're just gonna, if you agree just to receive a portion of the proceeds, then when you receive all the proceeds, that proceeds, it's going to go to a liability account called global settlement. And the global settlement works exactly the same as the trust account. So money in, money out, money in, money out, and everything needs to be properly recorded. So the only difference is that this is not going to touch the trust account whatsoever. That money, it will come from the insurance company, or will come from the party being sued, and it will go usually directly to the operation account. And once it hits your operating account, you do not record that as service, because it's not your money yet. Usually you get paid after your client get paid, and after everybody else is paid, that's when you get paid. That's how it works when you're working as in a case such as insurance, or or if you're suing somebody. All right. So how to record that is kind of the same thing, except like I said, this money is gonna hit the bank account. Let's suppose that okay, I gotta be income. Okay. We're gonna take one of these, and let's suppose that this is not the right deposit, so I'm not matching to anything. It's not supposed to be a match. We're just gonna record this transaction. It never hit. It's money received. It's coming from the insurance, and it never hit the trust. So this is coming straight into the checking account. And what I'm gonna do, the vendor, or the customer, vendor / customer, I'm gonna put the name of the insurance. So I will put Happy People's Insurance. Oops. Okay. All right. So they paid the attorney, and the attorney is gonna hold on to this money so that money can be distributed to several parties. Okay, and now we're gonna create a global settlement. You can call it something else, or case settlement, or whatever, whatever you want to call. Now we're going to have a parent account just like the trust liability, and this is going to be other current liability as well, but it's not a trust. Okay, I'm just going to call it other current liability, and I'm going to name it case settlement funds. Oh, case settlement. Oh boy. Funds liability. Okay, so this is the parent account, and I'm creating from here, but you can create from the from the chart of accounts, and just click on new and create all the accounts from here. But I'm just creating right from here because I think it's easier sometimes. Okay, this is not the right account, so I'm not gonna put this one because I'm gonna break it down by customer as well, so I know exactly what is the fund for each case. In this case, it's a case, right? So other current liability, and I'm gonna call the same thing as let's see, case settlement, two T's, slash, and then I'm gonna put the name of the client. I'll say I'm gonna call it Frosty again. Sorry, I got lack of imagination here. I'm gonna make it a sub account of that case settlement. You can call it global settlement, case settlement, whatever makes sense to you, but basically this is a liability account where you're holding funds from a specific case settlement. Okay, save and close. Okay, as you pay things out of that account, you're just gonna record those payments out of the account. So let's suppose that okay, this $75 here belongs or is taking out of that account. So we're gonna categorize that. We're gonna say we paid I don't know, let's see, United it can be, I don't know, it could be so many things, so many expenses. Let's see, United settlement. It could be, or shipping, or whatever cost it is. United settlement, that's the name of the company I'm paying. Okay, maybe it's for some kind of professional service or whatever it is, but instead of categorizing as an expense, this is not an expense from you, that's out of that settlement. So I'm gonna make sure that I put out of the settlement, and it's not the trust, it's out of the case settlement. Frosty, I don't want to get this confusing to you, but we want to make sure that this is once again, this is not a trust, it's a settlement, it's a case settlement, and I'm holding on to this money and paying bills in behalf of that case. Okay, and we're gonna add here. So the results is pretty much the same thing. The only difference between the case settlement, or you can call, global settlement, whatever you want to call it, and trust account is that, like I said, it's not gonna hit the trust account. It's just gonna go straight to the checking account because it's not required to. And then but nevertheless, it's not the attorney's money. That money is going to be distributed to several parties, including the attorney, because part of that money is the attorney fees as well. Once you pay yourself as an attorney, you have to take money out of that liability account and record that money as income. So this is what we're gonna do right now. Okay, so and because it doesn't come from the trust bank going into the checking account, so this is recorded a little different. So we can do a journal entry here. Okay. And I'm going to say that I earned some of that 800 and something dollars. Let's see what the balance is first. Okay, so let's go to the balance sheet. And we're going to take a look at that settlement. We're going to change this date here. And I'm going to scroll down, case settlement funds. Look at this. There's 793. If you click on the case settlement, you're going to see the money in, $868.15. And you're going to see the money out as well. So let's see. I don't see the money out yet. Maybe I should take a look at the dates. When was that created? So let me triplicate this page here. Okay. All right, so we're gonna double here, go to bank transaction. I'm gonna find that transaction that I just recorded. Was that June? It could have been June. So let's see, 868, that was June 29th. So let me make sure here. And so the deduction is here. If you click on the case liability, on the amount, should show the deductions right from here. But if you don't see it, you want to see it elsewhere, because this is it's a simple account and it's not showing correctly. It should show all the lines, okay, but it's not showing it. Not showing. We're gonna go to the transactions, chart of accounts, and I'm gonna show you that settlement account. So we're looking for Frosty case settlement. So we're gonna view register, and you're gonna see the income from the insurance company of $868.15, and the United settlement, you paid this $75, and then the remaining balance should be $793.15. I'm gonna record that as income. And let's see, let's suppose that this was July 1st. First, you know, you gotta pay the client first. So let's do that first. We're gonna record the payment to the client. Now the payment to the client will hit the bank account, and you will be able to categorize that as, you know, in this case we would select the case settlement for Frosty, right? And it would take the liability out of him. But let's suppose that is already taken and it's already settled. I don't think I have a transaction here that I can count. Maybe I do. Let's say that this money was actually paid to the client. I'm gonna put here that this was paid to Frosty, so you can see exactly what's gonna happen. This came from the Frosty, not the trust. We're dealing with the case settlement here, and we're gonna record this expense, and this is going to take out of the liability account. And now we're gonna verify what is the balance. Okay, so we're looking into my the chart of accounts, looking at the case settlement and view register, and you're gonna see all the transactions. So the money that came in, and then you have the money that was paid out to United Settlement, and then this money was paid to the client. The remaining balance is the income. Okay, we wish, right? Usually it's the other way around, but let's suppose that that's the case. So we're gonna do July 1st, and I'm gonna take out of that settlement account, and I am going to debit because it is a liability. So when I debit, I lower the amount, and I'm gonna put for the remaining balance on the account of $564.40. $564.40. And what I'm gonna debit here, it's gonna be service income. I'm sorry, not debit, credit. What I'm gonna credit here is service income, so that I can record that sale. So it's never gonna hit the account, the checking account, because it was already in the checking account. I'm just removing that liability so that I don't have to pay anything else besides that. This is the leftover. This is the money that belongs as to the attorney fees. Okay, so now I'm going to reset that and look at this. I have a zero balance on that account, so I have the whole history here. First we have the insurance payment, then we pay one of the bills related to this case settlement, and I have, usually you want to attach the not usually, always you want to attach the receipt for this, or the proof that you spend this money, and then you paid your client the share of the client, and then finally here is your settlement. Okay, all right, so this is it. That was a long one, right? Let's go back here. So this is how we treat global settlement. Oh, okay, sorry, adjusting over here. I'm back. That was too fast. Okay, all right, this is how we treat trust account, money in, money out, and how we treat global settlement cases. So like I said, it is different. In the trust account, you're gonna just, in the trust bank account itself, you're gonna categorize as money in, money out. You're gonna manage that account, and you want to reconcile each one to make sure that the funds match to whatever records you have for the trust funds for that specific client. And you want to do that for the global settlement as well, so that you know what is the balance on each of the case settlement. When the case is closed and everything is settled, zeroed out, you want to close that. You can actually go and close that, and the way you do it, okay, let me make it active again. Okay, include inactive. Let's see, Betsy. Okay, I'm gonna make active so that I make inactive again. Sorry. Okay, so Betsy's trust account is all settled, so I'm gonna put Betsy here. Case is closed, zero balance. I'm gonna click here and make inactive. Okay, same thing with the global settlement, same thing. Okay, so that's when the case is closed. Then you go take a look at the reports, balance sheet, and we're gonna change the dates because some of those transactions are in the future. Okay, maybe it's in the past by the time you watch this video, but okay, so case settlement, Frosty, we can close that. You're not gonna see it anymore. Here I only see the Frosty does not mean for the trust liability. So that's how you should keep it. Once the case is closed, you want to close it here as well to manage it better. Okay, let me go back here. All right, guys. Okay, sorry for that. All right, I hope this was useful. Okay, now if you have questions, if you want me to cover specific things, just let me know. Now I wanted to put a disclaimer here. This is not to substitute your CPA. I am not an attorney. This is just how we treat in QuickBooks Online the accounting for the liability of monies that does not belong to you. Okay, so like I said, I'm not an attorney, but I've worked with lots of attorneys, and this is how we treat it, because if we book it as sales, it's not only incorrect, but it's going to create an unnecessary tax liability for money that does not belong to you. It's kind of like paying taxes on borrowed money. You don't want to do that. You don't want to pay taxes on that. So it needs to be treated correctly. So it goes to the balance sheet. It does not belong to the attorney until the attorney earns that money, either for trust account or for global settlement cases. If you have any questions, feel free to write down below. If you want us to cover a specific subject, write down below. We'll be happy to reach out to you and help you out with that. If you need further assistance, if you need like a one-on-one training, or if you need like QuickBooks cleanup or ongoing bookkeeping because you need to focus on your law firm and make more money than that, please do so. Contact us today and we can help you out. We can either teach you how to do it, or we can take care of the books for you so you can focus on making lots of money. Hope to see you next time. And until next time, keep on smiling.